Welcome, everyone, to another episode of The Real Hosts of Short-Term Rentals. We are a group of hosts from around the world who manage an assortment of rentals, and each week we get together to discuss a different topic. We're doing something different today and exciting. We have our first member hot seat, and we have our guest, Angelique, who is in the Seattle area. She's going to talk about herself and ask a few questions of the group. As you can see, it's a smaller group today. A few of us have important things that we need to we couldn't get away from. So, Angelique, maybe you can give us a little bit of background of who you are, the type of properties that you manage, and what questions you have for the group today. Angelique?
Hi there, I am Angelique in Seattle. I have 4 Airbnbs in the Seattle area. One of them's in the city of Bellevue and the other 3 in Seattle itself. 2 of them are in the same building I live in. And I have been a real estate agent in the past, real estate appraiser. I currently run a real estate investing club that we teach all kinds of topics in the real estate world, but I love the Airbnb category. It's always been fun to me until the economy changed more recently. And I got a lot of cancellations and things like that more recently. A lot more people trying to negotiate prices since the interest rates have popped up on our world out here. And so I do love it until most recently. I hope I get that passion back in. Mm-hmm. Of loving it again. So I started out, my first Airbnb was a beach home with a gorgeous view, cute house that I ran for 5 years. And that was the only one I ran during that time. And I loved that, but I got divorced and had to sell that one. And so that's why I'm up here in the Seattle area now, trying to make it as a single gal in Seattle.
Super. Well, thanks for that overview. What questions do you have? And now I believe in the before that we started the call, you mentioned that you own 1 Airbnb now and you manage 3 others. So and just give us a quick overview of those 4 that you're running right now.
Well, one of them is actually a duplex home that is actually attached. There's a door between the duplexes, so it's really one house that's huge. So it works super well if you're a flexible person for all kinds of different combinations of what you can do. So I've got an Airbnb where I'm actually in the Airbnb on one side right now, and then my personal home on the other. And since I'm single and I know Seattle is mostly hot in the summertime, I want to rent out the one I live in also just during July and August. And I've got that worked out so the closets have locks on them and stuff for the things I'm going to be leaving there for my personal items and just take my things I need for a couple months away. And then I have 2 that I rent in, one in Seattle and one in Bellevue, where I would say my cost to run those is about a base of $4,500 a month. Rents in Seattle are about $24, $29 for a nicer property that's bigger in size. And then the utilities add up quite a bit too. And then your furnishings, of course. So
how long have you had those arbitrage models? Like that units?
I just opened the most recent one in September and the other one for 1.5 years now. And then the one I've had this one that I'm living in right now for 2.5 years.
Yeah, it's tough starting one in September because you're coming into the low season.
Definitely.
You've got that high rent every month. So
yes. I did run that one at really a low price during the winter just to keep money flowing in, even though I don't like running that way. I actually like pricing higher and being available for those people that have the insurance claims and things like that.
Yeah, makes sense. So Angelique, tell us what questions you have for us, and let's see if we can help you out here with some answers.
I've always struggled about where to open a property. If you're going to buy something, where you should do it, what kind of demand there would be there, how you figure out what the rents would be relative to the mortgage and expenses, and just where you get good spreads and good demand all year compared to very seasonality. So I don't use a lot of tools since I'm just a small host. And so I don't know if there's tools I should work towards getting there that would help with that, or how you guys go by instinct or figure things out?
That's like the question of the century, especially right now, right? Like the deal analysis. What I always think about too is like when looking at my clients, basically like P&Ls for the business, management is like the second most expensive thing on the statement. So I think if you're not looking inside your market, you're going to make it very difficult to even consider cash flowing because you won't be able to self-manage. You're going to have to pay somebody to help you with the property. So for me, I really do like shopping in my market, or is there an affordable market where boots on the ground are super, super cheap? Which
and where they have the boots on the ground, you know, where there's a little bit of an infrastructure.
Exactly. Yeah. So I think it's getting harder and harder to make short-term rentals work if you don't already either have the property or if you're obviously have a significant down payment. Like I know in my market, and your market that you're in right now, it's almost next to impossible with the real estate prices. But what I do, so I just had a great conversation with a guest, and this is what I like to do. I go visit the market and I talk to the manager that I rented from. I talk to all the managers that I was considering and have those conversations. So I had a lengthy conversation with a guest. I let her know the cost of the property, what the owner's operating expenses were, and then a range of prices over the last 3 years. I said, honestly, in my opinion, nothing in this market's going to cash flow. That's my advice. By the end of her stay, she was sold. She wants to invest in this market. So I really do feel like that hands-on. I went to Tulum. I was interested myself in investing in Tulum because I'd seen it blowing up on Instagram. I had seen just the traction over the last couple of years. The infrastructure that they're putting in that part of Mexico was really attractive. But then being on the ground, I was absolutely not. It is so oversaturated. It is very quiet. It looks very splashy from all the metrics that you can look at. But then by being on the ground, I was like, this is not a good idea at the moment. Maybe 10 years from now, but I doubt it. So for me, I'm very tactile, I guess I would say, is like, go stay there because this is such a huge investment. And it's such a saturated marketplace now. Like even 5 years ago, it was, things were at its tipping point. And I think we're on the other side of it. So that's my pessimistic view there.
So, Angelique, I don't know if you've heard of a website called Mashvisor, Mashvisor. I haven't used it myself, but I know that with Mashvisor, you can put in a property, the address of a property that's on the market, or just a town, a city that you're interested in. And it'll show you, it ties in, I believe, to the MLS, and it will give you the estimated revenue that you can make from each one of the properties based on the costs and what sort of return you can get for those properties. So it's a really good website if you're thinking of purchasing a place. In terms of size, I can give you a specific example we operate in Sonoma County, California, and it's a very, very large county. It takes an hour and a half, possibly 2 hours to drive from one end of the county to the other side. So it's really, and we operate in most of the county. We don't operate in all of it, but I have done analysis of properties that we have on the west side of the county and properties that we have on the east side of the county. I've used Price Labs for that, Price Labs Marketplace. So if you already have a property, you can put that into Price Labs Marketplace, and it'll give you the comps based on the number of rooms. So what I would say is, just based on this specific tool, the minimum you want to have is 3 bedrooms, because by having less than that, there's a lot more competition. The higher the number of bedrooms, the lower the competition. If you have 5 bedrooms, you're one of very few compared to if you have 2 bedrooms. So ideally, you want a space that has a larger number of bedrooms that can accommodate a larger number of people, because then you're going to get more bookings, and also at a higher price. So I would just tell you that those are the two parameters that I would look for if I was looking to buy a place, and that way, you can narrow it down based on price and your ability to service it.
I believe Price Labs as well has a 30-day free trial.
Right.
So you can use their tools, their premium tool to help do it.
The market dashboards are great. Price
Yeah.
Labs.
Mm-hmm.
Yeah.
Mm-hmm.
But Angelique, I stay kind of local. My machine is not well oiled enough to operate remotely, but if I was going to look at places, I would try to see if there's a place that's less seasonal than maybe Seattle, where maybe it's a mountain place where there's skiing in the winter and in the summer it's just like come to go hiking or things like that. I know a lot of people are investing in their national parks and things like that. I haven't looked into it enough to know how much of that is hype and how much of that is real. But I think the seasonality thing, if you can find a place that's in season 12 months out of the year, that's what got a value right in and of itself.
That's the golden egg, right? Yeah, I agree. I mean, I totally am on board with that, Michael, because where we are, we've had a lot of rain over this winter, and it's been incredibly slow. December, January, February, it's starting to pick up a little bit now, but yeah, I mean, it definitely, where we are, is a seasonal market, and I also have a property in San Francisco, which has unfortunately been negatively affected by all the negative press about our city. So between those two, I would agree that if you can find a place that is not as affected by the seasons, that would be ideal.
Another option would be to have two places, one in a summer high season and then one in a ski area. So that's a winter high season. And then in theory, it would balance each other out a bit. Of course, that means you've got to find two different places, but
right.
Yeah.
Here comes the pessimist again. Let's also doomsday prep, right? So what's happening in my market, Angelique, is we just got a clean sweep across the entire province of regulations, shutting all grandfathered short-term rentals down. So, yeah. So a lot of us bought using pricing based on the short-term rental model. So, I mean, and any real estate investor, we all know this, we should be looking at it based on long-term rental revenue. Right? That's your backup plan. Short-term rental revenue is your icing on the cake. So I would caution everybody now, just because I do believe regulations will sweep across the globe. Maybe not as harsh as here, but who knows? I mean, you're dealing with it, Laurence, in San Francisco, but use the long-term rental revenue model. The long-term rents are increasing. So if you can cash flow at that, then I think you're safe to probably invest anywhere if you can cash flow at the long-term rental rates. But
yeah,
that's the pickle we're all in now. Here is none of us can rent our units and cash flow with long-term rental income.
Yeah,
I like your suggestion, Michael, about the summer and winter offset. That's a really good idea.
Yeah. You mentioned before we started that you had another question related to furnish finders, I believe.
Right. In Seattle, the rents for our base rent that I'm renting is $2,400 or $2,700 a month. And then when you add on the utilities and the furniture, my cost to run these is about $4,500 a month. And on Furnish Finder, they have categories that the people can click, and $1,500 a month or $2,000 a month, and the highest is $3,200 a month or $3,250, something like that. And so, of course, mine never will work in that category. And so when I have reached out to people that sound like they might fit, I've always got, oh, that's way too high. So I've not yet gotten a person that's interested in that kind of even to break even rate for me. And so I've kind of given up on it. So I was just wondering if I should approach it different or if it's just going to be the way it is in my area.
Yeah.
For the kind of property I have, since I have a larger property.
Right. I can jump in on that one. We have one rental that, and just to clarify for everyone, Furnish Finders is a great site for monthly rentals. It's not focused on short term, less than 30 days. We have one property that is mandated that it has to be a monthly rental. And so we put it on Furnish Finders, and we're in the same boat. The property over the winter time was renting for, well, I mean, the owner wouldn't go below 42.50. And as a result of that, we weren't getting any traction at all on Furnish Finders. And it was a long process, cumbersome process to actually get listed on Furnish Finders. I would suggest, if you haven't already put your property on Zillow, I would definitely suggest putting it on Zillow, because monthly rentals are really, they are a totally different animal to short-term rentals. People who are staying a month or more, very often they won't book without actually going to see the property. So it's kind of more similar to a yearly rental, where you have to take them to the property, show them the property, and then they'll sign a lease with you, and oftentimes will ask for a deposit and other things. So Zillow is a great resource to get people to contact you to come and see the property, and we've gotten quite a few rentals through using Zillow.
Yeah, I
So,
do.
go ahead.
Oh, no, you go, Michael.
Yeah, no, I haven't had much luck at all with Furnish Finders. I don't know, but one thing I would say that you could do is there's like insurance relocation companies like ALE Solutions and a couple others. I haven't used them, but that seems like that would be a better way to go, because I think price is less of an issue there. And lots of times it's just families, like their house burned or got flooded, and they'll be there for a while, and I think they'll pay top dollar.
Yes, the flood victims have really helped me out. I'm happy to help them too, but they've really stabilized my business.
Yeah, I had one 2 years ago that stayed for a month at my place, and yeah, it was great.
Yeah. We do have a website for your properties, your own website.
I created one, but I really haven't used it. It doesn't interact with anything. It's not sophisticated. So it really hasn't gotten any traction.
Even just for a gallery. So I do about 80% of my revenue in the low season with midterm rentals, and about 55 in the high season. In fact, I've got 2 contracts out today. And I would say 75% of them actually come from my website. They don't book. I just use it for a contact form. So I get tons of inquiries every day based on people looking for rentals. I would say 90% of them aren't going to work, but just having that contact form, and then the gallery is just how I send those out. My biggest contracts have come from relocation agencies, and those relationships have taken time. But I am their first call that they make. So they're not out there shopping around for prices, hunting around on different websites, because it's so tedious. They'll just reach out to me. What do you have? You send them there. Obviously, you're super fast. They rarely negotiate. They mark up the rate that you give them to their client. So I really like those. So those are that again, that's manual relationship building, but the website brings in a ton of traffic. And then how I get the traffic to my website is a Google My Business listing. So I don't know if you have that as well. And then you use keywords like accommodation solutions, executive. People really love the executive rental. I feel like that's my strongest keyword that I've been getting a lot of traction from. But Google My Business brings in a shit ton of organic traffic. It's
That's
like
awesome. What's your website address?
keystokelowna.com. That's what gets me all my juice. And I absolutely love midterm rentals. And now that my market is being basically shut down, I'll have to go 100% midterm. So then
it's good that you're being forced to do what you love.
Yeah, right. Well, it makes life easier. We don't have to worry about 10 checkouts. Like we have a long weekend coming up. I'm like, oh, I'm just gonna be done with this soon. All these checkouts.
Right.
People parked in there. The only challenge I would find is like because I work with mostly investors, I only own 2 and I manage the rest. Letting them know it is still higher risk to do midterm. So the pickle that I was in today is I have someone who's interested in moving in this weekend, but I need them out June 30th because I have someone booked already for the summer months. So puzzle piecing in the occupancy is a real challenge. It's a lot easier to do when you have multiple properties because you can just point them to another. But when you're limited, with inventory. And then with the relocation agencies, they want flexibility. They want to know that they have the option to extend. So you can't pre-book the next guest really, because you just don't know when these people are leaving. And in my experience, sometimes they'll rent for 30 days at a time and they'll stay for 5 months. I had one group book 5 listings. They booked for 6 months and ended up staying for 10. So that's the bummer, is the occupancy and puzzle piecing the reservations together can get a little bit tedious with smaller portfolios, but it can be fruitful.
Yeah. So lastly, you're thinking about maybe dipping your toe into larger, like event type houses.
Yeah. The family reunion and the wedding kind of venue. I don't know that I could afford a wedding kind of venue in Seattle, but being able to house the people for the wedding. So I've heard from other hosts I've talked to that have those kind of facilities that they seem to do really well.
Yeah. Well, I mean, as going back to your earlier question, if you can afford a larger home, you're going to get more bookings because there's less competition than smaller ones. But Dina, you have your main inventory is larger properties. So can you talk to that?
Yeah, tons of demand. The challenge is everybody wants the same time period. Family reunions, weddings, they all want July. So it is a challenge for occupancy through the rest of the season. You can only sell that house once, right? So I do see a lot of, and in fact, I'm actually exploring another project, more individual units to give me flexibility, but all on the same site. So like what Michael was saying is, he's seeing people in national parks. I do see a trend moving in that direction with short-term rentals, is more experience, almost like tiny homes, all in the same area. So if you do have a family reunion, everyone kind of gets their space, but then they have the whole compound or whole property. Versus that one big home, because literally it will sit empty some months because there's nobody that needs it or that can afford it. Even when I negotiate with people, they're like, oh, that house is too expensive for me. I was like, no, I'll give you a rate for 2 people. So it is a bit of a challenge to get people to even consider it in the low season. Would I say go out and buy something like that? No, but if you have it already, then yes, I think you could utilize for event space. But I don't know if I would purchase a large home. I would do multiple little homes in one area for sure. Yeah.
Michael, any thoughts on that?
No, I like Dina's idea about getting some property and having like tiny homes on there, or sort of a separate areas that you could rent the entire property as one big shebang for a wedding. But then you could also rent out the individual units when, outside of July, that kind of thing. Then, I mean, still though, getting into that kind of thing, if you don't already own it, it's going to be tough.
Yeah. But that is an interesting sort of slant to market that sort of property in the way that you're talking about for an event where the individuals have their own space, but then you can have like a central area where there could be a wedding or there could be a party or something, as long as it's, as long as it's in an area where there's not an issue with noise. Super. Well, I think that wraps up our first member hot seat today. Angelique, we want to thank you very much for joining us and for bringing the questions that you have, and wanted to put this out to others who are watching. If you have questions and you would like to be part of our member hot seat, please just email us. You can reach us through therealhosts.com, and we'd love to have you on as a guest for future future podcasts. I think that's a wrap, everyone. Any last words or questions?
Thank you, Angelique.
And
Thanks for including me.
yeah, did you want to tell us a little bit more about like the other communities, or like where we can find you, how we can support you?
Well, the real estate club I run is called REAPS, Real Estate Association of Puget Sound. And we do have some webinars online too for our members. So we have 50 different webinars online, but we have 6 or 7 events a month that I coordinate. So that's what I'm mainly working on, more than 40 hours a week. So I have a very busy life, but that's where people can find me. And the email for that is info@reapsweb.com.
And is it RAP?
REAPS.
Perfect. Cool. I love that you're doing that. That's really awesome.
Yeah.
It's fun. It's a lot of work, of course, but it's fun to meet all the investors that are eager and excited about doing things.
Great way to find some funds too when you're all of like mind in there. You can work on a project together. I love it. Love it.
Point.
Yeah, you're the best. Thanks for coming. That was awesome.
Yes, thank you again, and we'll see everyone again on our next episode. Take care, and everyone have a great week. Bye-bye for now.